Hey guys, welcome back. I hope you had a really great day trading today. So today was Monday, March 24th, and we opened with a really big gap up across the board. This is SPY and we are on the 30-minute time frame, and we opened today with a gap up above the 30-minute 200 moving average, above the top of the implied move, and right into this bear gap. We basically took it up right to the next level that had a little bit of positive momentum, which is the 200-day moving average. The level right above it, the weekly 35 EMA, is tilted down, and we did not get above that today. So in last night's video, I did not mention this, and during trading today, I wished I did, but hopefully after the dozens of times I've mentioned this, you guys did remember this. When we open with a gap up above the implied move, and the same thing goes if we gap down underneath the implied move, the next move is typically a squeeze. If we open near the top of the implied move, then we typically stay within range. But if we open with a gap completely outside of the implied move, then we typically do squeeze higher. And that also happens a lot more often when the implied move and the 30-day average volatility are this disconnected. There is a $7 difference. So make sure you add that to your playbook, that if we do gap completely above the implied move, that always ends up killing options down here and it pushes price higher. So shorts got squeezed today. VIX dropped almost 10%. Which added to that upward movement. All right, so SPX, we also opened with a gap up here, and we gapped right to the top of the implied move and right into this bear gap, and then we took it up. So 200-day moving average was that next level with positive momentum, and then we saw resistance at the weekly 35 EMA, which is pointing downward. We did close right at that level, and we did completely close out the bear gap here. Really wild way to start the week, and I want to draw attention to the 35 EMA here. We did get a bullish signal, and we got the bearish signal back here. This was just off of all-time highs. We did this little gap down, and then we saw this 35 EMA cross underneath the 30-minute 200 moving average. And then from there, we did see the 35 EMA as a really strong resistance until we got down to here, which is the bottom of the uptrend. I'm going to take that to the let's take it to the 1-year chart here. Here is that uptrend right here. So last April, last August, and this March right here. So that 35 EMA was resistance all the way down. So today we ended up crossing that 35 EMA back above the 30-minute 200 moving average. That is a bullish signal. It doesn't mean we can't consolidate here. It doesn't mean we won't retest the 30-minute 200 moving average. But as of right now, because of that cross up, look to the 35 EMA as support, and then backed up by the 30-minute 200 moving average. So we closed out this bear gap, replaced it with a bull gap, and we did get a bullish signal today. We still have a bunch of resistance above us, and the moving averages are still facing down, so I'm sure we're not going to be flying up and making new all-time highs anytime soon. But we did have an initial bull signal, and since here we look at technicals almost exclusively, we did get a bullish signal. So don't fight the charts. If you're bearish, you really want to wait for this 35 EMA to go back underneath this 30-minute 200 moving average. So SPY closed up 1.79%. SPX up 1.76%, VIX down almost 10% today, down 9.24%, and we did not even touch the implied move today. So if you have any takeaway from today, gap up above the implied move, you're gonna get a squeeze. All right, QQQ. We opened here with a gap up completely above the implied move. So implied move 487, so we gapped up and squeezed. We also got a bull signal here. QQQ, we did see that cross down right here, and when we did, that became a very strong resistance all the way down. Very few blue candles, and then we consolidated back to the 30-minute 200 moving average, and today that 35 EMA crossed up and gave us a bullish signal. Now I also want to draw attention to something else that I noticed today, and this goes for SPY and SPX as well. This 30-minute 200 moving average did not turn upward, so expect that to be retested. We need this to turn upward before moving higher. We do have a bullish signal. The next step is turn this 30-minute 200 moving average. So QQQ gapped up into this bear gap, did not close it out completely. In fact, it's kind of right in the middle here. Above price today, we have a little bit of gap left, and underneath we have a little bit of gap left too. So very interesting. Got right into maybe a possible bull trap right here. Just the way that landed makes me think it definitely could have been. QQQ did have a massive up day today, up 2.04%, VXN down 7.2%, and we didn't even touch the implied move here today. So again, the disconnect between the implied move and the 30-day average volatility is giving us some wild swings. I noticed it yesterday. I'm not sure why I didn't say anything. That wasn't intentional, but when there's such a big disconnect, you can add another level which is right in between the two. So maybe in this case, looking to 492 or even 491 would have been a good idea, and then taking the $2 wide spread from that level, and that would have gotten above the price. Of course, this is looking in hindsight and just remembering about when it's so disconnected, what we can do to get better trades and get further out. And when I say we, I mean me, because I definitely did not have the best trading day. So QQQ gapped up over implied move and pushed into this bear gap and is floating right in the middle of it, still underneath the 200-day moving average. And we did get an initial bullish signal right here. And IWM, we did open here with a gap up to the top of the implied move. So 207 was the top of the implied move, and we squeezed up and we got even outside of the next day's implied move, which is very typical of a move when we open above the implied move. And look at this 35 EMA. Last week it was still a little bit resistant here. Today we just crossed straight up, got that bull signal. But remember right here, this 30-minute 200 moving average hasn't turned up. So it could have been too fast, too soon, especially with this 1 hour momentum right here kind of slicing down above us. From a technical standpoint, this is bullish, but don't be surprised if we retest some of these levels. Now, this is something I talked about a lot earlier in the year. When the 35 EMA crosses into the green, oftentimes we do see a pullback. We did open with that 35 EMA already in the green, so this could show an extreme move. I think I made that sound as confusing as possible. Maybe next time this shows up, I'll be able to explain it a little bit better. But this could be an oversold signal already right at the beginning of the week. So let's look at the 35 EMA right here. We did get that cross up today, and let's zoom out. This is IWM, and right here is where we got that cross down. So after we crossed down, we didn't immediately drop. We did trade sideways. We tried to get that 35 EMA back above the 30-minute 200 moving average. And then when we got rejected, that's when we saw that big drop. And remember, IWM had 0 blue candles all the way down once we got rejected right here. But the initial cross down was right here. So if we see something similar to that here, we got that cross up. We might try and see that 35 EMA bounce on the 30-minute 200 moving average before moving higher. And of course, a lot of this momentum needs to turn before we really go anywhere. So don't be surprised if we do retest that. IWM did close up 2.49%, RVX down 4.81%, and we did not even touch the implied move today. And DIA also had a massive move today. We did open with a gap up, and we have some really weird signals right here. So we gapped over the 200-day moving average. That's a bold move. But that 30-minute 200 moving average crossed underneath it, and it is facing down. So that is a really weird signal. And then we have the 35 EMA that we got a bullish signal on that 30-minute 200 moving average. So I have never seen anything quite like that. There's conflicting signals here, and we did take it all the way to the 35 EMA on the weekly time frame, and that is where we bounced. So we took it to the weekly 35 EMA, took it to this down gap right here, back to the 35 EMA, and then up to get pushed out of this down gap. Really, really weird day. The signals are not clear, but all I do know is that we are within the implied move for the week. I did sell spreads here. I sold 427, 429 bull put spreads, so I definitely hope that this gap right here pushes price back down, and I have a feeling because of all this, that is exactly what's going to happen. All right, so that was a recap of today. Tomorrow's trading ranges are coming up next, and that video is for members only. So if you want to join, there is a link in the pinned comment, and we're going to go over tomorrow's entire trading range for all 5 tickers, and also there's going to be a link to the charts on TradingView so you can grab them. And as soon as you do join, you will get a notification as soon as that video is ready. So come join us in the VIP trading room and have fun tomorrow. Trade safe. Make sure you take profits when you're up, and I will see you guys tomorrow night.